Answer. The silver market never announces its biggest moves in advance. It doesn't shout, it whispers. Before every major rally in history, silver spent time moving quietly. The answer. Confusing the crowd and boring the impatient. This silent phase is exactly where we are right now. Answer. While most people are distracted by daily noise and short term price swings, experienced observers understand that calm periods often come right before powerful breakouts. Answer. Opportunity is rarely comfortable and it never looks obvious in the beginning. Markets reward those who can think ahead, not those who react late, sir. When the majority finally notices silver moving, prices have already traveled a long distance. By then, emotions take over. Fear of missing out replaces logic. Answer and smart positioning becomes panic buying. The real advantage belongs to those who recognize early signals, study trends, answer, and act with clarity before excitement enters the picture. This is how preparation separates leaders from followers. Answer. Silver has a unique history that gives it an edge during uncertain times. It is not only a precious metal, but also a strategic asset with real world demand, sir. As economic pressure increases in confidence in paper systems weakens, attention naturally shifts toward assets that have survived every financial cycle. Answer. Silver's role becomes more important when trust is fragile because it represents value that cannot be created overnight or manipulated easily, sir. What confuses many people is volatility. Price fluctuations scare away the unprepared, but volatility is not the enemy. It is the doorway to opportunity. Answer. Every strong market move requires energy, and that energy is built through periods of tension and uncertainty. Those who understand this stay calm, manage risk wisely, answer, and remain focused on the bigger picture instead of reacting emotionally to every movement. This moment is not about prediction, it is about positioning, sir. Waiting for perfect clarity usually means waiting too long. Progress favors those who take informed action, stay patient, and trust their preparation, sir. The silver market is quietly sending signals, just as it has before every major move. Those who pay attention now are not chasing opportunity, they are creating it. The answer. Demand is the force that drives every market. And right now, silver demand is rising from multiple directions at the same time. This is not a single trend or a temporary spike, it is a structural shift. Silver is no longer valued only for its shine or history, it has become essential to modern life. Answer. From electronics to renewable energy, from medical technology to advanced manufacturing, silver is deeply embedded in industries that continue to grow year after year. Answer. At the same time, supply is not keeping pace. Mining silver is not quick, cheap, or flexible. New mines take years to develop, require massive investment, answer, and face increasing environmental and regulatory pressure. Unlike paper assets that can be created with a keystroke, physical silver has real limits, sir. When production slows or remains flat while demand accelerates, pressure quietly builds beneath the surface of the market, sir. This imbalance between demand and supply creates a powerful setup. Markets are simple at their core. When more people want something than what is available, value rises. Answer. But what makes silver unique is that much of its demand is non-optional. Industries do not buy silver because it is fashionable. Answer. They buy it because their products cannot function without it. This kind of demand does not disappear easily, even during economic slowdowns. Answer. Many people underestimate how fast shortages can appear. Inventory levels can look stable until suddenly they are not. When supply chains tighten, answer. Prices do not adjust slowly, they reprice aggressively. History shows that commodities with limited supply respond sharply when pressure reaches a breaking point. Answer. By the time shortages become obvious to the public, the market has already moved. Understanding this dynamic changes how you see opportunity. Answer. This is not about guessing tomorrow's price, but about recognizing a long-term imbalance that cannot be fixed overnight, sir. Those who study fundamentals instead of headlines understand that rising demand combined with limited supply is not a coincidence, it is a signal. Answer: when pressure builds quietly, the release is rarely gentle. The question is not whether this imbalance matters, but who will be positioned before it fully reveals itself. Inflation is one of the most powerful forces driving silver's value, and understanding it separates those who protect wealth from those who watch it erode. Answer: when currencies lose purchasing power, the need for real assets, tangible stores of value, becomes critical. Answer: silver has historically played this role better than most alternatives. Unlike paper money, whose value can be diluted by policy decisions, answer: silver holds intrinsic worth that has been recognized across centuries and cultures. As prices for everyday goods rise, people naturally seek stability. Sir, silver is not just an investment, it is insurance against economic uncertainty. Its purchasing power does not vanish overnight, sir, and it often rises in periods when confidence in other assets is declining. The connection between inflation and silver is not abstract. It is practical. Answer: those who hold silver can see their wealth maintain strength even when the cost of living increases. Technology and industry amplify this effect. Answer: as economies develop and require more silver for electronics, solar panels, and medical devices, the metal's scarcity becomes more pronounced. Answer: inflation alone could encourage interest, but when paired with growing industrial demand, silver becomes a double force of necessity and security. Answer: this combination creates a scenario where silver is not just optional wealth preservation, it is strategic. Answer: many investors ignore this relationship because they focus on short-term price fluctuations. They see a dip and panic or see a spike and chase. Answer: the wise approach is to understand silver's role in the broader economic landscape. Its value is not tied to momentary hype, but to enduring principles of supply, demand, answer, and monetary reliability. Inflation may move in waves, but silver has consistently moved to protect and preserve wealth over time. Answer: recognizing inflation's impact transforms strategy into action. Those who prepare now, positioning silver in their portfolio with awareness and discipline. The answer: are not speculating, they are fortifying against uncertainty. Silver is signaling that it is ready to fulfill its role once again. Answer: and those who respect this signal act confidently, not impulsively. In the face of rising prices, silver is not just a hedge, it is a lifeline for purchasing power. Answer: volatility is often feared, but in silver, it is a powerful tool for those who understand it. Prices swing up and down, sometimes sharply, and most people see only chaos. Some they panic, sell too early, or hesitate to enter the market. Yet volatility is not risk, it is opportunity. It is the market's way of concentrating energy. Answer: creating moments where prepared participants can benefit far more than those who wait for calm or certainty. Answer: every significant rally in silver has been preceded by periods of tension. Price moves are never smooth. They compress, shake out weak hands, and build momentum quietly. Answer: investors expect this pattern, stay disciplined, managing their exposure carefully while others react emotionally. They know that volatility tests patience, but those who withstand it position themselves to capture the rewards when the market breaks free. Understanding cycles is essential in turning volatility into advantage. Markets move in phases: accumulation, expansion, distribution, and correction. Volatility is simply the expression of these phases, revealing where energy is accumulating, sir. Those who track trends, monitor supply, demand dynamics, and plan for swings can enter at optimal points and ride moves with confidence. Answer: rather than being tossed around by short-term noise, psychology plays a central role in how volatility impacts outcomes. Fear makes the crowd sell, greed makes it chase. Sir, in both cases, losses often follow. The prepared investor, however, uses volatility as a signal, not a trigger. Sir, Each spike or dip is a clue about market sentiment and an opportunity to make informed decisions rather than reactive ones. By embracing volatility, investors shift from being victims to being strategists. They do not avoid market swings, they anticipate and respect them. Silver's inherent swings are not a threat. They are a roadmap. When volatility increases, so does potential reward. Understanding this distinction separates those who watch the market nervously from those who leverage it confidently, turning temporary uncertainty into long-term advantage. Opportunities in the silver market favor those who act early, not those who wait for perfect timing. Many people hesitate. Thinking they must have full certainty before taking action. But in markets, certainty rarely exists. The biggest gains always go to those who prepare, understand the dynamics, and are willing to move decisively when signals appear. Waiting for confirmation often means missing the most profitable moments entirely. Preparation is more than just knowledge, it is mindset and strategy combined. Those who study supply, demand trends, monitor market sentiment, and understand silver's historical patterns are ready to act when others are frozen by doubt. They know that even small, informed steps taken early can compound into significant advantages over time. The ability to act confidently comes from readiness, not luck. Timing and patience go hand in hand. Acting too late is costly, but acting without preparation is dangerous. The sweet spot lies in informed action. Moving when the market shows early signs of imbalance before hype and fear dominate. This approach turns volatility into a friend and uncertainty into opportunity. Those who master timing with preparation position themselves ahead of the crowd. The silver market sends subtle signals that are easy to overlook. Rising industrial demand, tightening supply, inflation pressures, and cyclical patterns all point to potential movement. Ignoring these signs may feel safe in the short term, but opportunity rarely waits. Early movers who respect these signals and act with discipline are the ones who reap the rewards. Action is the ultimate differentiator between winners and watchers. Preparation, understanding, and patience set the stage, but decisive movement captures the gains. The silver market is ready to reward those who position wisely today. Hesitation guarantees missed opportunities. Awareness and action create wealth. The choice is clear. Prepare, observe, and act before the moment passes.